Make sure you watch this video if you're thinking about using a holding company. Hey everyone, my name is Simon Misiewicz, and in today's session I'm going to be talking about holding companies and why you should or why you should not be using them with your property investment portfolio. Now, if you want to know about limited companies and whether you should use one or not, then please watch this video. If, however, you've already got a limited company and you want to know how to extract money out of it in a tax efficient way, then you need to watch this video. And finally, if you've got a limited company, you know how to extract money out of it, but you're not sure about IHT and IHT protection when you die, then you need to watch, yes, you guessed it, this video. Alright, so we're now talking about holding companies. So, let's ask the question, what is a holding company? Well, a holding company is just another limited company. It's a special purpose vehicle, or SPV to you and me. So when should you use them? Well, a good example here is if you've got 3 joint venture partners and you're working with them and you've decided between you, you would have 50% shareholding of those limited companies each. That's great. Now what's happened is that the year end is miraculously the 31st of March. Now that's going to happen in reality, but let's just go for an example that the year end is the 31st of March. Okay, that miracle's happened. And what's happened at the end of the year, it's after tax, it's got £100,000 net profit, if you like. And that money is to be distributed. Now, each one of your JV partners are all different. Okay, so you've got, I don't know, Mr. A, Mrs. B, Miss C, and they want to take their share of their profits, which means that they're going to take £50,000 out. Now, here comes the problem. Because you've got 50% shareholding of these companies and they're saying, well, we want you to take the money out because that's what we're doing, all of a sudden you're now sitting there with £150,000 worth of profits. Now let's imagine you're already a high rate taxpayer and you've got to take these £150,000 out of the companies in the form of dividends. Well, blow me. If you didn't need that money at all, you could be facing not just a 32.5% tax bill on those dividends, but you could also be faced with an income tax liability of 31.1%, 38.1%. Now let's imagine that you was in a situation whereby you didn't need that money at all. All of a sudden, you could be paying 32.5% until you become an additional rate taxpayer, and then 38.1% dividend tax on money you didn't want. Man, that sucks, right? I mean, what do you do about this? Well, the first rule is planning. There's a great analogy here, isn't there? I'm sure you've heard of it. If you fail to plan, you plan to succeed. No, clearly fail, right? But my point is instead of having these 3 joint venture limited company shares in your name, you could have created something over on top of it. And let's call it Property Management 101 Holdings Limited. Okay, so this Property 101 Management Limited is at the top here, right? What would happen instead is that the money, the 50,000 from each one of those companies, would be fed up to the holding company. The beauty behind that is that the holding company is not taxed. That's right, it's not taxed. Because the 3 companies have already paid their corporation tax. So the fact that the dividends have been distributed up to the holding company, it means, well, hold on a minute, there's no further tax to pay. And if you're the type of individual that didn't want to extract that money anyway, but to reinvest it into property, that money now sitting inside the holding company of £150,000 could set up another SPV below it and buy more properties. So there's a great way of benefiting from your joint venture partners and the profits they're making, rolling that up into your holding company, and then creating another SPV or special purpose vehicle for this holding company to loan money down to this new SPV to buy property. You didn't need to take that money into your own personal name. You didn't need to pay that income tax. So can you see how using a holding company can really benefit you? Now, before you start getting charged into this, one thing I would always say is that people do set up limited companies using companyformations.co.uk or whatever the cheapest formation companies are. I don't know what they are. But I would always say that you do need to make sure you go through a solicitor or a tax specialist or even a company secretarial company properly that focuses around this area, because they're going to need to look at the share structures that you have. They're going to create different types of share structures. It could be ABC shares. I'm sure you've heard me say that in a previous video, where you have person A with A class shares, and they have voting rights. You have someone else with B class shares with no voting rights, but they've got equal share of dividend distributions. And you've got C class shares who has no entitlement to dividends and no voting rights at all. And that could be part of a growth share strategy, which we just talked about in a previous video. You might want to watch that one about growth shares and IHT protection. But in this video, we're just talking about how you make sure you don't have a tax problem because you've got these shares in separate limited companies, but you use a holding limited company instead. So then guys, has this video been useful? Can you see how holding companies can help you minimize your tax liability, especially if you want to reinvest the money anyway? Type in yes and how you've used holding companies in the past and how you plan to use holding companies in the future. And if you've watched this video and you think, well, I've still got questions about holding companies, please feel free to type those questions below in the comments box, and I'll be sure to answer those within 36 hours. Don't forget guys to always press the subscribe button below this video and the notification button so that you can be notified every time that I release a new video. And be sure to tune in to Monday night sessions between 7 PM and 8 PM where I'll be answering your property investment questions and your property tax questions. I can't wait to see you there.